I would like to call the Audit Committee meeting to order at 4:05 on Thursday, June 23rd. Could I have a roll call, please, of the Audit Committee?
Yes, David Chanel present.
Don Hayes present.
And Veronica Kell present. I would also like to call to order the Board of Selectmen meeting at 4:05 p.m. Could I have a roll call, please?
Teresa A. Morse present.
Jazz Sexton Duranian present.
And Veronica Kell present. And I'll ask the Finance Committee.
And I would like to call the Finance Committee meeting to order at 4:05 p.m. Roll call vote, please.
Gerald Bazik is present.
Mark Hussey present. Don Hayes present. And
Andrea Wood present.
Thank you. And that's all our members, and that is a quorum.
All right, so I'd like to welcome Melanson Heath. Zach, are you there? You're hard to see. You're tiny.
Yes, we're here. Let me see if this helps. Hold on. We can zoom in a bit. How's that?
That's better. If you can zoom in even more, we'd like it.
How's that?
That's good.
All right.
That's pretty good. And could you, would you like us to introduce ourselves so you know who's here, and then you could introduce yourself so we know who you are?
Sure.
So I'm Veronica Kell. I'm the chair of the Board of Selectmen, and I'm also a member of the Audit Committee. So let's go Audit Committee first. So Dave Chanel.
Yes, good afternoon. I'm Dave Chanel. I'm on the Audit Committee.
And Don.
Don Hayes. I am on the Audit Committee, and I'm also Finance Committee chairperson.
So would you like to introduce the rest of the Finance Committee, and then I'll get it to Mark?
Okay.
Gerald Bazik is vice chair.
Mark Hussey, member.
And Andrea. Is she present?
And Andrea Wood is on the internet, and we just see her name.
And from the Board of Selectmen, we have Teresa. Would you like to introduce yourself?
Yeah, hi, I'm Teresa Morse, the newest member on the Board of Selectmen.
And also we have Chaz.
Hi, Chaz Sexton Duranian. I'm the vice chairman of the Board of Selectmen.
And we also have with us our town administrator, Eric Slagle.
Hi, nice to meet you guys.
All right, so Zach, go ahead and do yours.
Yes, so I will start by, I will do my best to remember all of the names that are present. My apologies in advance if I slip up on one, but my name is Zach Nolan. I've been the audit lead for the town of Townsend's engagement for the better half 4 or 5 years. And this year is Ed Boyd.
How you doing, everyone? I'm Ed Boyd. I'm the audit partner for the town of Townsend. Similar to Zach, I've been leading this engagement for anywhere between 5 to 7 years now. And I want to say thank you to all the folks on the call here. I can say you're the first group that's wanted to zoom in on the auditors. So we certainly appreciating that upfront personal attention. So very much appreciated.
All right, so I guess we go to you first. We all got the financial statements, and there are extra copies at the table here if anybody needs them. People that are attending from other places, hopefully you have the financial statement with you. I can share the screen if that would be useful.
We will certainly leave that up to you folks. We've, Zach and I have chatted, and we've prepared this, for this discussion in a couple of different ways. First and foremost, we really just want it to be effective for all of you. So we can, we probably have a, 50+ page document here, but the unfortunate reality is only a handful of pages are really significant and largely center and drive the conversation. But, we're happy happy to either, kind of give you a rundown of some of the bullet points, some of the talking points, answer any questions, or we're happy to really kind of start at the beginning of the document and really, pick some of the pages and really, that might help illustrate some of the things we're talking about. But we're certainly here at the pleasure of the audit committee. So we're, Madam Chairwoman, I'd certainly put that back on you and the group. We can take this in a number of different directions.
And additionally, we have, I think we provided yesterday, the fiscal year 2020 management letter and the side letter, which we are happy to discuss. Unfortunately, at this time, we were missing a few documents to really wrap up the audit, and we did receive the majority of them yesterday, and we'll be drafting that fiscal year 21 management letter and side letter in the near future. The good thing is a lot of what we're seeing is a recurring event that began last year or was presented last year. So what's in this document and what was in there in prior years is likely to be what is also in there in the current year.
Okay, so let me ask people on the call, what's the consensus? Should I share screen so that people can see the document as we're talking? What would you guys prefer?
Just a question. Does everybody have a copy already in their possession? I would think so, right?
Is there anybody that does not have a copy in their possession?
Right, yeah.
So my thought would be that if we have a further discussion on a particular item, you could then share. Close up on that. That probably would be the best way to do it.
Yeah, or just have them reference the specific page number of the PDF, and we could all go to it if it's in our possession.
All right. Okay, so Zach, let's do it that way. We'll just reference pages, and if people feel there's a need for me to share, I have the document up now.
Perfect.
So this is the financial statement from FY21 that you sent yesterday, Zach, that I have ready to go if we need it.
Awesome.
All right.
All right. Well, really before we get into the document, we certainly want to thank the audit committee for this opportunity to come in and present the results of the June 30, 2021 audit. And first and foremost, we want to thank primarily the finance department for their their hard work, and not to leave anyone out, there are folks from other departments that we do reach out to. So we know going through an audit is not the easiest of tasks, and we really just want to give kudos to those individuals that's involved, because they've been incredibly helpful as we've gone back and forth over the last couple months producing the financial statements in front of you, and really just want to show them some thanks for their hard work and working with us, and getting us through the audit process, which has predominantly been in a remote capacity the last couple of years with what we've dealt with COVID, which has not made it any easier. So on behalf of Melanson, we certainly want to say thank you. Some required communications for you folks. We think the audit went very well, and I think as we go through the financial statements, that'll kind of add some context as to that meeting. We found the books and records to be in good working order. Key accounts were reconciled. Unfortunately, they were a little less timely, and that has been one of our recommendations. But we'll certainly talk about that. And there is corrective action moving forward. But when we were ready to go for the audit, we did find that key accounts were reconciled. There were no disagreements in the application of generally accepted accounting principles between us and management. We do have a management letter and some recommendations that we think will add some efficiencies and effectiveness, but there are no material weaknesses and there are no significant deficiencies that we identified in your internal controls. So we really just have some control enhancements where we think there could be some added value there. And lastly, but certainly not the least of topics, is we issued an unmodified opinion. That means that the financial statements in front of you that we've audited are presented in accordance with generally accepted accounting principles, and largely what that means is that's a clean opinion. Anything other than a clean opinion is not something that the town wants to be in. So certainly something that should be looked at as a positive. Now, as we go through the document, I did hear someone say reference the page number. We do have hard copies in front of us. So anytime that I reference a page number, please look at not the PDF page number, but the bottom number, because that's going to be the report page number, just so we make sure that we're all talking apples to apples there.
Okay.
So from there, I'd like to turn your attention to page 2, really page 1 and 2, and that's the independent auditor's report. And this is really just kind of showing you folks, really where the opinion resides in the financial statements. And these are really the only 2 pages in the document that are ours. We assist the town in compiling this document, but again, this is probably the most important page that any informed user is going to go to, is what is the opinion on the financial statements? Because as I said, anything other than unmodified is not going to be looked at as favorable. So you'll see here that we've issued an unmodified opinion as of June 30, 2021. Now, I'm going to flip through the next couple pages, but I just want to reference it and say that this is what's called management's discussion and analysis. And this is a tremendous resource to go back to, and this will kind of help you understand the why and really paint the picture as to, where key accounts resided at year end, help you understand how the town did, and hopefully add some context as to what some of the key drivers that led to the financial position as of June 30, 2021. I'm going to skip ahead here, and where we're going to go is page 13, report page 13, and that's called the Governmental Funds Balance Sheet. And this is probably the second most important page behind the opinion that, again, any informed user is going to go to. And when I say informed user, we're really talking about your rating agencies, your bondholders. Those are your primary users, and then probably some folks in the citizenry that are, in finance. And why this is so important to the financial statements is you'll see in the first column there, the town's general fund. That's your primary operating fund. And the first number folks are going to look at is that third number up from the bottom. And that's your unassigned fund balance. And that's about $2.6 million. And that's up over the prior year, about $870,000. That represents approximately 11% of the town's operating expenditures. Okay, so that's looked at as what I would call stable and favorable.
One thing to note that is included in this unassigned fund balance number is the balance of the town's general stabilization account. So it is prudent to understand that it's not just a fund that you can draw from actively. There is a component of the general stabilization that is in there. And the balance of the general stabilization fund as of fiscal year 21 was $1.4 million. And that can be seen also on report page 8. Where we talk about the different types of stabilization funds and the balances, and again, their fund balance classification for the financial statements. So you can see you have $1.4 million in the general stabilization at year end versus $1.96 last year, which is a decrease of $49,000. The majority of that change is attributable to the bullet point below, which indicates $126,000 of general stabilization monies was used to fund the snow and ice deficit from the prior period, so from fiscal year 20. Just kind of staying on the stabilization note, the capital stabilization account did decrease by $164,000 for a balance of $103,000 as of fiscal year end 20. And a lot of that change is attributable to the town utilizing $180,000 for capital expenditures in the general fund.
So, Zach, can I ask a question on this?
Of course.
So when I look at this, I see the 126,000 for snow and ice and the 180, and if I add them together, I get 306,000. So I maybe I'm simplifying this, but when I look at the change, I only see 213,000. Why is that?
That is a great recognition. What is in there is investment income. So the money that is tucked away is put by Treasury, I believe, in Bartholomew and is invested. And a lot of that change, while you'll see it doesn't line up one-to-one, is because of the positive earnings on investment income that generated returns. And those returns are directly put into that fund. fund. Often when you have stabilization fund money tucked away, it is so that it can earn its own income and generate its own income to then subsidize future appropriations.
All right. Thank you.
And if anybody else has questions throughout, please feel free to jump in.
Absolutely. And that was a good point by Zach, because one of the common questions that we get when we're talking about unassigned fund balances is, hey, how does this reconcile with our free cash? And really what the unassigned fund balance is: your free cash, your general stabilization. And the general stabilization from a financial reporting perspective, even though to Zach's point, he was talking about there are some restrictions on there as far as getting money in and getting money out. But the common term is the rainy day stabilization fund, and it really just acts as kind of largely a restricted savings account on some level. So when you're thinking about unassigned fund balance, that I would kind of look at it as free cash with some, call it audit adjustments, if you will, that are very similar to other communities in the Commonwealth, along with your general stabilization fund. So we just want to add that perspective, because that question pops up a lot. This is our free cash, but then you're showing us we have more money here. So that's really the differentiating factors between the two. And earlier I mentioned that it represents about 11% of your expenditures, and that's in the table that Zach had talked about earlier. And that's an important metric.
That's actually on the preceding page 7.
Oh, thank you. That's a pretty important metric that the users of the financial statements are going to look at is, does the town have reserves, in case of a crisis? And looking at some of the publications that the GFOA has put out, having a reserve fund balance, over 10% is looked at as favorable, but I think really the sweet spot is about 2 months worth of operating expenditures is really kind of where their recommendation falls. So you're, as you can see, that increase in the unassigned fund balance is trended very positively. And it is really in line with some of those GFOA recommendations there. I'll pause there and see if there's any other questions on this particular item. And again, this is really where the focus is in relation to looking at the financial statements. The general fund kind of paints the picture. How did we do? And that's where the users are going to go.
To dive a step deeper and really try to, what we want to do is help you understand the why. So yes, it went up by 870 and our total fund balance went up by 826. Why did that happen? And that's where the table below on report page 7 is helpful. And what that demonstrates is the change in stabilization accounts, the use of free cash as a funding source. So that's what you used, or what the town used in fiscal year 21 to fund the budget. And then it talks about the budget performance is those next 2 line items, which is revenues that came in greater than budgeted, which is a good thing. And then expenditures that came in less than budgeted, which is also a good thing. So those are what we generally refer to as turnbacks. And that's showing savings that you had from a budgetary perspective in fiscal year 21. Now, to help understand where those numbers come from, if you go to report page 51, this is where the town's fiscal year 21 budget versus actual is presented. So what you'll see is that the total revenues, if you look at right under the revenues header, total revenues, the far right-handmost column, that's where that $582,517 comes from. And it also breaks down in details in what areas did the town see revenues in excess of budgeted. And you can see in property taxes and penalties, interest, and other taxes, those are significant drivers this year. And one of the reasons why that happened was because of a lien posting that occurred in May of 2021. So as you know, once that gets, or perhaps to add some context, generally when there's a lien posting and the tax collector posts everybody's name out there and says, here's how much is owed, there tends to be a windfall that comes in before these properties begin to get either foreclosed on or remain in tax title. And that generated approximately $500,000 in additional revenues that the town generally doesn't budget for. And those, the principal balance of those tax liens can be seen, and the effect is on that property tax line item to the tune of, that it's part of that $440,000, and then the interest and other penalties are included in that $143,000 number. So that component in and of itself is one of the main drivers that allowed the general fund to generate additional revenues in excess of that, those of which were budgeted.
Question for you. So that 440 on the far right column on the property tax, that was an influx of taxes that was not expected. It was based on tax taking and whatnot. Correct.
The town budgets properly, conservatively for the amount of tax title revenue that's going to come in. And that amount was in excess of that budget. Unfortunately, I don't have that number, what was budgeted directly on at the top of my head, but I could get that if that was asked.
Okay, thank you.
Of course. So I did just want to illustrate that this is where some of the items generate and stem from, that really attributed to the positive change in unassigned fund balance and total fund balance for fiscal year 21 of the town's general fund. Thank you, Barry. Of course.
So can I ask a question about that? Because I thought when we did the budget in the spring that we figured out what the property taxes were if everybody paid their property taxes. So the property taxes here, this tax lien posting, those are for people who have not, taxes that were not, I shouldn't say for people, those were taxes that were not collected over the past 2 years. And I say 2 years only because 2 years previously, I believe we did another tax lien posting. Is that true?
Based on, yes, that appears to be an accurate statement.
Okay. All right.
And the 143 was interest on that for the most part.
Oh, the interest and penalties.
So
Yeah, right.
interest is huge. It's like 17% or something.
Yeah.
So, okay. Thank you.
Of course.
Well, if there are no further questions and if something pops up, certainly be happy to go back to that. But now we're actually going to take a step back and go to report page 11, which is going to be your statement of net position. And so what you'll notice is that this does look fairly similar to the balance sheet that we just looked at. But what I really want to highlight is that when we're looking at the governmental funds balance sheet, and then we go to this statement of net position, the key significance is the basis of accounting. And largely what we were just previously looking at are your fund financial statements, which are large, they're on what's called the modified accrual basis of accounting, but it's largely cash basis, and it's really kind of a short-term, near-term inflows type of viewing. Whereas when you go to the statement of net position, this is traditionally what you're going to see in, really the private sector, and probably what some of you folks have seen in your accounting class and your accrual basis balance sheet, which has, traditional items like capital assets, your long-term bonds payable, capital leases, your landfill post-closure liability, compensated absences, and your net pension liability. So that's really the biggest differences. Again, it's not to say you have two sets of books, but one of the really big differences with governmental financial statements is that it tries to present a long-term focused set of financials and then a short-term focus, really kind of in the line of thinking that, decision makers like many of you folks on this call today, need to have, and again, both the short-term and the long-term. So in many of these conversations now, really kind of where the key driver goes is to the net pension liability. And now if you go, we can focus on the governmental activities, which is the first column. The business type activities is really the water fund, but at least for discussion's sake, that doesn't really represent a massive portion of the town. So looking at the governmental activities column, you'll see that the net pension liability is about $6.7 million.
7.6.
Oh, excuse me, $7.6 million. That's about 3/4 of the way down, just in case someone needs a point of reference. And then if you go down to the bottom, and you'll see the second number up from the bottom there, your unrestricted net position is a $5.6 million deficit. I will share with you that is very consistent with every community in the Commonwealth. And that's largely driven by net pension liabilities and net OPEB liabilities. Now, the town of Townsend does not have OPEB, so that is one thing that is not factored into the statement of net position, and then driving that number down even further, which many other communities have. But nonetheless, both of these long-term liabilities, these benefits that are being provided, to the retirees are getting a lot of attention. And I remember being on this call last year, and I think pension was a pretty significant topic of conversation. Now, just to add some perspective here, is what is the net pension liability? Now, the town of Townsend is a member of the Middlesex County Retirement System that has a total unfunded liability. Now, under generally accepted accounting principles, and specifically GASB 68, the town is required to essentially in the accrual basis financial statements, not in the general fund, but on your accrual basis financial statements, you need to recognize your portion of that unfunded liability, which is actuarially determined as far as what the total pension benefits are, less what assets they have, and that is just math, gets to a net pension liability or an asset. The unfortunate reality is there's not many net pension assets out there. There's a lot of net pension liabilities. So again, trying to add some clarity to this, because it certainly seems like it's more of like a negative aspect of these conversations, but the perspective is you're in the same boat as other communities. The Middlesex County Retirement System is about 53% funded. Now, the good thing is we've seen that trend in the right direction. Now, the unfortunate part of that is where we are right now, and I can just speak to my own personal retirement account. My net pension liability is going up. And that's one of the things that factors into the valuation, is these types of assumptions that does drive the liability. But in Massachusetts, there is at least some type of structure and plan in place to have the retirement systems fully funded by 2040. In the case of the Middlesex retirement system, and Zach, you can correct me if I'm wrong, I believe the latest funding schedule that's out essentially has the liability being fully funded by 2037.
That's correct.
Okay. So essentially what that means is largely if the actuarial assumptions and what transpires between now and then are aligned, that number is going to be zero. Now, certainly don't have a magic wand. A lot of good things have to stay aligned with the assumptions. But as of right now, hopefully that $7.6 million in subsequent years will then trend its way towards zero. And again, similar to other communities. And that is really, I know I keep saying that, but it's trying to highlight that this is not just a town of Townsend issue. This is something that the Commonwealth is dealing with, New England is dealing with, and really any issuer of financial statements across the country is dealing with. So it's really to just try to add that perspective, is because I feel like there's a lot of sticker shock if you just say, well, we're in the whole $5.6 million. Well, it is driven by the net pension liability. What I always like to try to say in these conversations too is that the long-term liability should be managed as such. You're not going to fix it overnight, but understand what these numbers represent, and particularly with pension, that there is some structure in place. But again, just something to monitor and discuss going forward. As it relates to you folks, I'm sure during budget discussions, there's you can see that pension appropriation going up, and that's kind of where the pressure is certainly coming. So trying to understand what the Middlesex retirement system is doing, what assumptions are going into the valuation, and how does that really impact you folks annually, cash out the door. I think that's really where the monitoring should take place.
Just to you answered a number of my questions. I apologize for the landscapes. I guess they're working late today, if you can hear. The bottom line is, this is outside of our control. We have, we're in the dink, 5.6 million. It's just a prorated share of Middlesex community's overall negative cash flow, whatever, targeted life. There's nothing really we can do about it other than to sit there and worry about it. But there's nothing we can do about it. We can't take positive steps to shrink that, because it's just a share of the whole. Is that correct?
Yes, and I will say that the positive steps are ongoingly being taken, which is by funding some of that unfunded liability with your pension assessment annually. So part of what goes into that is your actuarially determined contribution, and what makes that up is what it takes to essentially keep the pension liability to a level funded so that you're not continuing to dip more in the hole. But then it also has a portion of the unfunded liability that you are actively funding over time, which is why you see that figure that Ed noted of fiscal year 37. That really is when the quote unquote unfunded liability will be reduced to zero. Now, I will heighten that, as Ed alluded to, that presumes that every assumption is met perfectly with no deviations. I will say that does not happen, but it is moving in the right direction.
So their presumption of 2035, did that take into consideration the bear market we just went into last week?
So we can actually speak to that. So the investment rate of return, also referred to as the discount rate, which is what the actuaries presume will be the annual return for the investments, is 7.3%.
Yeah, they're off this year.
So what you're likely to see in fiscal year 22, or in fiscal year 22, you might actually see another trend in the right direction. But in fiscal year 23, unless this decides to correct itself next week, perhaps that liability may grow. So it does that 7.3% as well. It was 7.5% back in fiscal year 2019, and then was updated to 7.3 in fiscal year 20 and fiscal year 21. And some people will look at that number and say 7.3%, there's no way. In reality, that 7.3% is right around what we've seen market performance be annually over the span of 40, 50 years. So it's not that outrageous of a percentage, and is that 7.3% that Middlesex uses is in line with peer retirement systems.
And just one thing I'll add, Zach. No, good point there. Because when you look historically, it's not that out of line. But one of the good things is that the retirement systems do operate on a calendar year, not a fiscal year. So it's not like they necessarily, hopefully, are looking for a turnaround next week. There's still 6 months that hopefully the ship can right itself, because that's how and when the net pension liability is measured. Again, don't have a crystal ball. I'm not that optimistic that that's certainly going to happen. But just to offer some context, if all else remains equal, and the return is a negative 15%. One of the good things that does come from this, I don't mean to be overly technical or the geek that I am, but fortunately, in situations where there are kind of swings, what you'll see if you go back to the statement of net position, you'll see what's probably some new or different terminology to you folks. There's what are called deferred outflows and deferred inflows. And essentially what happens when you're dealing with these is that these are actuarial amounts that try to account for swings in these numbers. So if you have a big gain one year and a big gain the other, it's really kind of phased into the net pension liability over time. So it's not like you're going to see this one-for-one windfall. Okay, now my net pension liability went up $50 million, then next year it goes down 40. It kind of smooths it out, particularly when it comes to the investment earnings. So, but to your initial question, yes, to some degree, you're kind of just really seeing where the liability is, and really where I recommend communities to be, active, if you will, is the retirement system publishes actuarial valuations and reports, and I think looking at some of the assumptions and saying, do these make sense? And one thing I will also add is that PERAC has been pretty active. Zach, what do you think, over the last 5 years in really recommending and looking at the discount rates, and if they seem out of line with historic trends. Now, again, they're not mandating or demanding you change something, but they might suggest you might want to lower this discount rate, this investment rate of return, to be a little bit more conservative or in line with what we're currently seeing. So there are some monitoring features out there, but that's what my recommendation would be to you folks, to try to have a little bit more of maybe a pulse on where this net pension liability is trending.
And if anyone is really curious as to what some of the key assumptions are, those are actually in the town's financial statements on report page 47. So this is where you can see, one item that we'll talk about is the inflation rate of 3.25%. That is what the actuaries have projected will be the rate of inflation. So to speak to kind of the current economic environment, we can generally opine that 3.25% is not going to be met this year for a rate of inflation. I think we're all in the same boat. It's a touch higher, as we can see, at the gas pumps and at the grocery stores. So that really that's something that, again, as I've alluded to, you're not going to feel that all in the pension liability at once. It is deferred over time, and that time is generally right around 5 years for when they phase it in the actual impact on the liability itself. And further on page 48, if you're curious as to what the targeted asset allocation of the investments that are in the Middlesex retirement system, you can kind of see just what they're looking at to understand a little bit more as to what they project the long-term expected rate of return will be on those asset classes and what their target allocation of the investment mix is. So that these pages here in the entire note disclosure, if you really want to learn a bit more, begins on page 43. And there's a lot of good information that talks about what the pension liability is, how it's paid out, different options, and where the Middlesex County Retirement System and Townsend's related share of that is, how it's changed, etc.
Can I ask this question? I don't know if this is the right place to ask this, but are all employees of the town of Townsend enrolled in the retirement system?
I believe, yes, all full-time, well, pretty much I think anyone working over 20 or 30 hours a week.
Mm-hmm. Over 20 hours a week?
I believe it's over 30.
I believe it's 30.
Over 30 hours a week.
And that, those 30 I'm sorry?
30 or more.
Yes, I believe so, yes. And who is involved in the pension system isn't really elective. If you are a public employee in the Commonwealth of Massachusetts, there are Massachusetts General Law, Chapter 32, that governs who is required to participate in the pension system. And if you go to page 43, you can actually see the contribution rates, report page 43, the contribution rates of individuals that are in that retirement system. So while the town is picking up the portion of the unfunded liability and you're making your pension appropriation, you can also see that since 1979, individuals have been putting in 9% plus 2% of any additional earnings over $30,000 into that retirement system. So employees are actively funding their own pension liability in the future. It's the additional piece that it's essentially the town's match, if you would, quote unquote, that is the pickup on the town's budgetary needs.
Okay, thank you.
Andy, I know we threw a lot at you, so I don't mean to pause here. I was giving some folks some time to kind of digest the lovely topic of pension liabilities and see if there were any other questions. This tends to generate a lot of conversation. So,
and that's all set. None of that is negotiable. What liability the town holds versus the individual holds. That isn't anything that can be negotiated. That's all set by general law.
That's correct.
Okay, thank you.
I just have one follow-up, and I don't know if this is the place for it. When I was in the Board of Selectmen office, there was a home rule petition that we were one of 7 municipalities that excluded us from participation in the state retirement fund. My time in the Selectmen's office was probably about 10-12 years ago. Andrea predates me on that, but Andrea, if you have any recollection, do you recall the home rule petition and when it came around? I didn't realize it it was actually turned off. I thought we still had a limited obligation for retirement.
Don't remember it at all, actually.
Okay. I meant to reach out to our prior town administrator, Greg Barnes, because he was his tenure during my time was. We had multiple conversations with unions and so on that talked about retirement, and we literally had a home rule petition that we were only one of 7 municipalities out of the 369 whatever there are in the state that excluded that obligation. And I'm just curious, I emailed Veronica yesterday. I said, when did this happen? Because
do you know? Sorry.
I am wondering if, because I know we don't contribute to retiree health insurance. So if a retiree wants to purchase health insurance, they can do it at the full rate.
Yeah.
I'm wondering if and I know that we're only one of, I think it's 7 communities in the state where that's the case. So I'm wondering if it's part of that.
It may very well.
It applied to retirement.
Yeah.
Retirement.
It may very well be. My memory, just like the presidency, membership on the Selectmen makes you age very ungracefully. So after 2 terms, I'm not sure that I have much thought process from that period of time. But it just jumped into my head when I was looking at this the other day. So I could be mistaken. I know there was a home rule petition. I know it excluded us from certain obligations regarding retirement. I just thought it was the entire pension, but maybe I'm wrong.
I do believe Veronica is on the right path.
She's on point? Okay.
Yes, because what Ed alluded to earlier is something called OPEB, which is other post-employment benefits. And that's where is a lot of the retiree healthcare costs. And the town, as you'll see, does not have a net OPEB liability, which is incredibly rare. I can't speak to 1 in 7, but I am aware of the petition that the town has that speaks to OPEB. However, that does not preclude pension being included.
Okay, I stand corrected then if that's the case. Thank you.
And I guess maybe to try to draw some positives when we're talking about the long-term liabilities here. One thing that we do like to mention too, as we talk about some of these longer-term liabilities. One of the things that the rating agencies typically focus on is how rapidly you're paying down your debt. And that can really be looked at as a credit strength or a credit weakness. And the town pays its governmental funds, or typically out of the general fund. In 10 years, it pays down about 70% of its debt. In 15 years, it pays down about 91%. The water fund pays down 100% of its debt in 10 years. So those are looked at as credit strengths. Typically, the sweet spot is about 75% over 10 years that's typically for your AAA rated communities, but you're right around there in the 10-year mark at 70 for your governmental, 100 for your enterprise fund. So as we move away from OPEB, certainly wanted to add a positive highlight there that you're really not pushing off your debt, and that's one thing that is always evaluated, that you're taking out 30 years worth of debt for for an asset that's only going to be used for 10 or 20, and ultimately it's really the opposite here. So certainly wanted to highlight that.
And a page where that is illustrated is on report page 37. And report page 37 breaks down for the next 10 fiscal years, and then it's summarized by 5 years after that. And it shows you what the amount of principal and interest the town is paying on long-term debt obligations.
Now, as I mentioned, this is a very large document, a 50-page plus document, but those are really the focal points that the users are going to really hone in on. If anyone has any other questions, we're certainly happy to talk to any of the numbers, what's in the MD&A or the footnotes. But those are really not just for Townsend, but other communities, any type of these exit meetings. really where the discussion centers around, along with certainly the management letter and some recommendations there. But from there, I'd look to probably transition over to Zach, unless you folks have any other questions on some of the facts and figures here in the financials.
Anybody have any other questions?
No, I'm good.
Nothing for me.
All right, so
what we will do now is take a look at some of the management letter recommendations. And we will begin, I think we said at the beginning, but in case anybody has joined subsequently, this document in front of you is the fiscal year 2020 management letter, not 2021. However, we do presume that these are going to be repeated in fiscal year 21. We're just waiting on a few tail end documents to complete before we finalize the management letter.
can I ask that, what documents are you looking for?
We were missing a few documents from the tax collector or the treasurer collector's office, and some of those were actually uploaded yesterday, which is great. We need some time to go through them to update our audit documentation to render our conclusion on those items. And I believe there's one item still outstanding, and I have a phone call that I will make tomorrow to look to get that clarified as to what we're looking for.
Okay, does everybody have the management letter?
Page is it?
It's not within the document.
Oh, okay.
In front of you.
Would you like me to print out copies from you?
Yes,
Yes,
please.
can we
Because
just take a quick break here?
I'll be right back.
That's to get copies of the management letter.
Robert, what you might do is share the screen for it so we can review it together. Because you can PDF it to me and I can look at it. But
if you could, me, that would be good. Hartley. I think if I share, it should. So let me. If I can get it up.
If you could email it after the meeting, that would help too. Thank you.
And the management letter isn't that many pages, correct? 6 pages. So Eric is going to bring us hard copies of that.
I want to talk to Mr. Chanel about this brain injury that happens after 2 terms of being on the select board.
I won't be affected.
I'll put it this way.
He's talking about because he shared with me he almost ran in my.
Yeah, I'm only 35. Look what it did to my hair.
Oh, me too. Me too. I'm 27.
There you go.
1 term.
It must be very bad brain damage because, like I said, you shared with me, Dave, that you almost ran in my place. So
Yep.
it's that same stuff that happens after you have a baby. Oh, that wasn't that hard.
That I can't attest to. Thankfully.
What page should I pull up?
If you want to go directly to page 3, I think that's a good start. Well, it looks like all of our audit talk has put some little lady to sleep over there.
I have a very sick grandchild, so.
Poor thing.
Eric, I have it screen shared. I'm taking some people. Is there a way for me to get?
What if you minimize it?
on the left, we're
There you go.
good. And then the under bar, if you close the people down, the view of the.
You minimize that, maybe.
Just the,
Oh, I thought on mine it isn't showing.
I wonder if it's this.
Yeah, give it a shot.
Yeah, we'll try it.
There we go.
So is this screen just a summary of the argument you're talking about? But what's the result of the town itself? Is there a summary page on that?
Yes, those are on the preceding pages.
Okay. So this is more of like a defined terms page. That doesn't specifically apply to us unless we reach one of those gradients.
So the reason why I wanted to look at this page first was because, as Ed alluded to before, we did not identify any material weaknesses or significant deficiencies in internal control. And there are essentially 3 levels of control deficiencies that are deemed to be required to bring to the attention of those charged with governance. You have a control deficiency, which is the bottom level. You have a significant deficiency, which is raised a little higher, and then you have a material weakness, which is the top level of control deficiency. So I wanted to paint this picture. All of these recommendations, they're not material weaknesses nor significant deficiencies. These are simply control deficiencies that we have identified for management and the town to really focus on and improve on over the course of the next few years. So do we have everyone back?
Is this where you want me to be?
Yes.
Okay.
All right. So in looking at these, our prior year, we recommended that the town continue improvements over monthly reconciliations, specifically between the tax collector's records and the general ledger. And one of the things, this has been an item over the last 5 years, and it really stems from an old issue when the town switched softwares. There's essentially one balance that's maintained in the general ledger for what the tax title or tax liens receivable is, and what the collector has as the detail of that tax liens record. And in theory, those two should marry and speak to one another. And on the tax collector side, when they merged softwares and switched over, it's the belief that there are certain parcels that were not included that should have been. And that's really where we've made the recommendation for the last few years that the town dedicate resources to focus on and really try to identify which number's correct, which one is the most accurate and appropriate, so that the general ledger can be reflected appropriately. Now, we're not talking a giant number, a very, very large variance, but there is an amount that exists, and it has relatively maintain the same variance carrying, which means that no new things are off. It just means that this old historic information is missing from one side of the equation. And back when Barbara Tierney was in the Treasurer's Collector's Office, I recall her spending dedicating a significant amount of resources to this. And we worked with Barbara to really try to identify some things, and some improvements were made, which was fantastic. Unfortunately, as this council knows and these different committees know, the Treasurer Collector's Office has had some turnover in that position over the last, call it 6 years. And I believe we were looking at the 3rd Treasurer Collector in 2 years right now. So resources really truly have not been dedicated to identifying this tax title reconciliation issue. However, that does not mean that it shouldn't be looked at once the general operations have been satisfied and somebody has had the ability to sit in that seat and truly understand everything that is needed to go on in town and get the operations up and running in an appropriate manner. So that is why we continue to make this recommendation to really identify that tax title variance issue. So that's recommendation 1. The second recommendation really relates to improving the timeliness of cash receipt postings. And what this in summary says and indicates, when the Treasurer's Office collects receipts and has everything processed, there's essentially 2 modules. There's the Treasury module, and the Collector's module, which has all of the new payments that have come in. And then in order for those to be posted to the general ledger and updated in the accounting records, those have to be reconciled and pushed over to the accounting side of things for a post to the general ledger. And that's where they reconcile and make sure everything talks in terms of revenues and expenditures and how they're posted to the general ledger to make sure that cash reconciles and that revenues are appropriate and correct in the general ledger. Over the past few years, what we've come to understand and have seen is that oftentimes the town is months in arrears on posting those receipts to the general ledger. Now, why that is important is because users of the data, such as yourselves, should be able to access the most real-time numbers on the revenue side and to understand where the town stands in terms of its revenue projections or the budget for the year. And it really, having the timeliness of receipt postings implemented really allows users to have accurate data and real data. And unfortunately, because of the timing differences, individuals who are provided, revenue reports, there may not be months of revenue that the town has actually received that's posted in the general ledger. So that's where this comes from, is really trying to enhance the usability and the accuracy of information that is being used by the day-to-day decision makers and those who are involved in the budget process, etc.
So Zach, my question is, because my understanding is that this was pretty close to being caught up. Do you know where it stands?
I don't know where it stands currently. As of Terry's last day, I know that this had got caught up to the tune of maybe 2 months, which is as close as it's been since Barbara and Lori Plord were in their respective positions with the town. So there has been considerable gains made based on discussions. I have not viewed anything for fiscal year 22, but based on discussions with Terry, it was getting closer and there were improvements being made.
Okay, that was my understanding.
Yeah, I think there was just when Terry left, Laurie and Melissa were working on getting on track to get back to try to
where it was
because time was going by and
yeah,
they'd gotten close. I think they lagged off maybe a month or two, and then they were getting close.
Okay, so I thought that was pretty well under control. Okay.
I'd like to keep those, Eric. I'd like to keep those on a priority list of things we need to keep a watch on.
Yeah, Laurie and Melissa and I actually met on that last week. This exact issue.
Now, informational recommendation number 3 is not going to be present this year. And again, these are just informational recommendations. This related to a new Government Accounting Standards Board pronouncement that required additional reporting in established custodial funds. So that is no longer going to be present. Recommendation number 4 is going to be present for fiscal year 21's management letter. And again, that is an informational recommendation informing the town of a new pronouncement that comes into effect in fiscal year 22. So for your next audit, GASB statement number 87, which addresses leases, is going to come into play. So this is why, again, just some informational recommendations. It doesn't mean anybody, did anything wrong. There's nothing that we saw that needs to be improved. It's just making the town aware of these recommendations and ensuring that people, decision makers, are staying on top of things. So that handles it for the management letter. Now, another document that we provided is what is called the side letter. And I believe, Madam Chair, I sent that to you.
It was the last 2 pages of the packet. I just
it must be a separate download.
It was a separate attachment in the same email.
Hold on, let me just. I have it, but I want to project it, so I have to. Let me stop my screen sharing. Let me play around and get it. I don't know why it's not working. I might not be able to share that one. Sorry.
Madam Chair, I can begin speaking about it if you would like.
That would be good. If you could do that, that would be great.
Okay. In the side letter, let me first take a step back and explain kind of what the side letter is. During the course of our audit, there are a myriad of whether it be a very minute issue that is a verbal recommendation, make sure this is happening, et cetera, or the management letter, which is what we believe has risen to the level to be communicated with those charged with governance. And then there's this document, which is the side letter, and this is for those in-between items that we think should be improved to the tune of requiring a written, documented communication, but doesn't rise to the level of a management letter recommendation. So these are often things that are larger than just a tiny, tiny itty-bitty thing, but not large enough to bring to the attention of those charged with governance. So as you can see, this was addressed to management of the town in the prior year. This is, again, the 2020 side letter. And the first bullet point talks about maintaining certain receivables and refunds due. And this is largely just a general ledger adjustment that we recommended. And we do anticipate that this will be repeated last year. We did just get some additional documents that may lead us one way or another. We have yet to analyze them. But this essentially talks about having receivables in the general ledger presented as a net number as opposed to a gross number. And what that entails is largely related to individuals making overpayments on their real estate taxes. So that the gross number presents all of the money that is owed to the town, whereas the net number decreases that gross number and gets it to a lesser dollar amount. But in reality, all of those negative numbers are refunds that are due to taxpayers. So what is currently presented in the general ledger is the net number. So you have the gross net of the refunds. And for accounting purposes, that net number should be grossed up, and there should be a liability that's created saying, this is not our money, we owe this money actually. It's not netting down our receivable. We have this much in receivable and this much that's owed to taxpayers, if that makes sense. So that's really what the first bullet point is talking about here. Moving to the second bullet point, this was talking about maintaining the investments at fair market value. This recommendation was implemented in fiscal year 21, so this will no longer be applicable. I'm sorry, it was in fiscal year 21, so it will no longer be on the side letter in fiscal year 21.
Zach, can I just add one thing?
Of course.
Just going back to that first bullet point, I think you laid that out very well, Zach. But one thing I think we want to stress, though, is to try to not overcomplicate things, and certainly correct me if I'm wrong, but this really is an evaluation that probably should be done at year end. Mm-hmm. I don't think it's something that you want to necessarily be doing on a monthly basis. I think it's paramount that it's done at year end. We've seen some communities do it on a quarterly basis in situations where there might be large refunds. And I think that's where this stemmed from. I think there were some large refunds due at the end of 2020. So we're not trying to say you really need to kind of completely change how this is being treated, but this is really just kind of a year end. Do we owe a lot of money? And the proper recognition is receivable is money that is owed to us. The liability is money that we owe folks.
And one thing that also helps this situation is by processing refunds at year end. That eliminates this accounting treatment altogether. Right. And I do believe that the town processed more refunds and processed them more timely in fiscal year 21. So that is a positive side of the coin. But I had a great point there with this. This isn't something that the treasurer collector needs to do on a monthly basis. It's something that should really be looked at after year end, once things are reconciled and you know where everything stands. Now to the third recommendation. This pertains to stabilization funds and will actually a great reference point that we talked about earlier. Madam Chair asked a great question with what is the difference between the $203,000 or $206,000 that I added up before and this other number that's up here. What this is talking about maintaining appropriate balances in the town stabilization funds on the treasury side. So as we discussed before, when funds are tucked away in various stabilization accounts, they are required to be held and accounted for separately so that the interest earnings of those monies tucked away becomes a direct contribution to the fund balance itself. So that means that in order for that number to be accurate and true, the balance in the bank should agree with the balance in the general ledger. So what this comment in the prior year was talking about is saying there was $182,000 and a downside of $127,000 on the bank side that where assets weren't moved appropriately. Now, the good thing is for fiscal year 21, these two issues have been, or appear to have been corrected. Unfortunately, there's $180,000 more in the capital stabilization account at fiscal year 21 year end than what should be, and that is attributable to the $180,000 that the town utilized of capital stabilization funds to fund some general fund capital expenditures. So what happened is on the accounting side, the money was moved over appropriately. On the treasury side, there should have been a transfer from the capital stabilization bank account over to the town's general coffers. So that's simply what we're talking about with this recommendation, is just to ensure for stabilization accounts that the timing and the impact of the cash transactions are occurring as they're voted and in accordance with the proper fiscal year, to make sure that everything is married and that interest income and investment earnings are becoming a part of the appropriate bucket, if you would. I'll pause there for any questions.
My one question would be, do we know if that $180,000 variance has been corrected in the interim?
I'm sorry, could you finish that? Or?
I think he's saying, has this been subsequently corrected?
Oh, has this been corrected? I'm sorry, I completely misheard that. I don't, to my knowledge, I'm not sure if it has been, if it was corrected subsequently. It was not corrected as of July of 2021, but it very well could have been as of subsequent to July 2021.
Okay, thank you.
But one good mechanism to understand if it has been is the town invests in Bartholomew for their stabilization accounts. So there's a listing of, it's called the trust fund Bartholomew account. So there's two investment types. There's the trust fund Bartholomew account and the water fund Bartholomew account. If you ask and look at the trust fund Bartholomew account, there's a detail of all of the different trust funds that are in there, which talks about some of your permanent funds, some of your private purpose trust funds, and included in that bank balance is the stabilization funds. So one thing that can be done is by looking at that ending market balance of those two stabilization funds and reconciling those to the balances in the general ledger. And that will give you the answer as to if that transaction had been transferred on the treasury side.
Okay, thank you.
Of course.
So is there anything that you see that will be added to either the management letter or the side letter this year, or is it too soon for you to tell us that?
We can generally, the items that have been discussed appear that we project that they're going to appear in the same homes. I don't forecast anything being added to the management letter. As to the side letter, we would like to go through kind of those additional documents that have been uploaded to us over the last day to be able to fully assess that. At this time, I can project potentially one additional item, but just want to ensure that is, want to make sure the T's are crossed and the I's are dotted before publicly stating that.
Any other questions from any of the committees here?
I'm good. Thank you.
I'm gonna, the things I had questions on, I've gone back and reread and get it on the second pass.
That's what I did, Don.
Right? Pass, I read one thing when I go back.
Okay. All right. Anybody else?
Good.
So I just had one other thing I wanted to mention, which is we have been contacted by one of our rating agencies that is looking for these financials by June 30.
Okay.
So I'm hopeful that that's a realistic expectation.
Did they happen to, we will do everything. I just want to mention, we had another client that had a similar situation too. Was it Moody's that asked that?
I can go back and check. I think it was Moody's. Yeah, I think so.
They sent the email out, and again, we certainly want to get this done as soon as possible. But when they called Moody's, they said, no, we're really just kind of reaching out, not necessarily putting pressure on, but they said, as long as you get us these things within 6 months, it's good. I'm not trying to necessarily.
We're not going to wait until 6 months, trust us.
we got a lot of phone calls in a similar boat too. But yeah, we will certainly look to see what's left to be processed and, have a firm answer for you by then.
Okay. I will give them a call.
Okay.
And if for some reason it's not the same answer, I'll let everyone know.
Okay.
And yes, we will do as much as we can to wrap this up timely. And this step is helping us move in the right direction. As I believe you all may be aware, the audit does now have to be discussed with the audit committee since I believe fiscal year 2019. So this step does need to take place. So we are moving in the right direction.
So I guess my other question is, after we get the final versions, if we have other questions, are you available to meet with us if we need that? I don't know if we will. But, okay. All right. Anything else from anybody here on the committees?
I have a question.
Andrew, go ahead.
When Moody said these, do they mean 2020 and 2021?
No, they were looking for the 2021 financials and the management letter were the two items that they were looking for, I believe.
All right. Thank you.
All right. Anything else? Well, back in that.
The other thing I was going to say is, does anybody going to the band concert tonight? It's a beautiful night out.
I guess we'll see you there, Dave.
I'll be there. Yeah, I'm always there.
I know you
I love
are.
the New England. It's a New England tradition. I love it.
All right. Well, Zach and Ed, thank you very much. We appreciate it. And,
Thank you.
Yeah, thank you for having us.
And on behalf of the firm, I know that the town is going through an audit rotation, and we just want to say thank you all, and we really enjoyed the experience. It was great working with the town, great working with you folks, especially now that we got to see you the last 2 years, and there was a committee, we got to actually have some rapport, so it was very enjoyable, and should any of you have questions, as Madam Chair you alluded to, please feel free to reach out after finals, and we can certainly get on another call.
All right, we will do that then. Thank you so much.
Thank you.
Thank you.
Thanks, guys.
Thank you.
All right, we need to adjourn our meetings.
I do have, Finance Committee has a couple of additional pieces of business we need to go through.
So are you going to keep the Zoom open?
We'll keep-
Is that the idea?
Yeah, I think that was the idea. We'll keep the Zoom open, so we'll.
Okay, well then at this point, I would like to adjourn the Board of Selectmen meeting. Is there a motion?
I'll make a motion that we adjourn the Board of Selectmen meeting at 5:18 p.m.
I'll second that.
All those in favor, roll call vote, please. Teresa?
Teresa A. Morse, yes?
Chess Extenduranian, yes.
And Veronica Coe, yes. So the Board of Selectmen meeting is adjourned. And is there a motion to adjourn the Audit Committee meeting?
Before we do, it's just a couple of questions, Veronica. What's our next step on the audit?
At this point, it would be to, if we have additional questions once the finals are in, we would meet again with that. And then it's to meet with Roselli and Clark to get the audit started for FY22.
I would assume, I mean, Melissa, they're just going to go through a couple of additional docs. I can't see their recommendations or observations changing very much. It almost are totally messed up on the docs again. So I suspect we'll be fine with that. So the next step is to bring in Roselli to the selectmen, or how?
To the audit committee. They are to meet with us. If you look at step, I think 4 and 5, maybe, I don't know, it's the steps in the process. I don't remember them, but we should be meeting with them as they start in August, September timeframe.
Okay.
So once the books are.
So you'll send out a little tickler for us to meet at some point.
I will, and I will also at some point write all the minutes for like the last 4 meetings.
We only met for 3 or 4 minutes at a time, so it's just basically, join, open and close. It's nothing. There's nothing there.
Couple of motions.
Couple of motions, yeah.
So, all right. All right. So, is there?
I'll make a motion. We adjourn the audit committee at 5:20.
I second that.
All right. Roll call vote.
David Chanel, yes.
Don Hayes, yes.
And Veronica Kelly, yes. We are adjourned. Thank you very much, everybody.
See you guys in the common.
Okay.
All right, bye.